The economy remains resilient despite a slowdown in economic activity. According to the latest Cytonn Markets Outlook report, it projects that trade is tipped to pick up, all anchored on an easing monetary policy and falling commodity prices. Here's more.
The local economy is expected to grow by between 5.6% to 5.8% this year, buoyed by the expected increase in access to credit to the private sector following the repeal of the interest rate cap.
We do expect to see just a general increase in terms of investor confidence, but those investors that had already priced portfolios for Africa are here anyway. So whether there's Brexit or not, there's generally capital that is allocated towards African markets. So you generally tend to see that capital just oscillate between asset classes.
Overall, the Kenyan currency is expected to remain stable at between 101 shillings and 104 shillings to the US dollar, supported by CBK's short-term reserves of $8.8 billion US dollars. The NSE is expected to maintain a positive outlook, supported by a stable macroeconomic environment, with a projected 12.4% growth in corporate earnings expected to bolster counter valuations. The agricultural sector is built to experience positive growth, driven by sustained rainfall and budgetary support directed towards irrigation. It is not all rosy, however, as the economy is expected to face headwinds from high debt repayments.
And then when you're borrowing lump sum in the external market, you're not really, that means majority of the pressure to finance your budget then falls onto your domestic borrowing front, which then obviously leads to increase in interest rates because investors know that, look, government needs the money, so they're going to pay for it.
Diaspora remittances are also expected to decline following the expiry of a 10% tax amnesty extended in the 2018-2019 budget. Henry Githaiga, KTN News.
Now, the emergence of e-commerce has seen businesses develop an online presence, taking advantage of various platforms to offer goods and services to consumers. The trend has generated a high demand for website development and hosting. However, online transactions are prone to attacks by fraudsters who will attempt to hack and steal data from websites. So what can businesses do to safeguard against online attacks? Take a look.
A joint report by the Communications Authority of Kenya and the Kenya National Bureau of Statistics in 2019 found that about 27% of firms sell their products online. The increased use of mobile money and other modes of cashless payment, coupled with a growing number of delivery services, has also seen more consumers opt to shop online. As a result, more businesses have had to carve out an online presence.
Most of people try to change from that vintage way of interacting with customers. You understand that we are in that age whereby digital is taking over. And with that, most of people don't want to be left behind. So they fast track their movement so that they can fill that niche that is outside there.
Website hosting companies note that businesses should consider a service provider's ability to securely store and relay information as key factors of consideration when choosing their website hosting platforms, considering the numerous hacks happening in the world.
All of us have that clear mind, or they have that ideal and pure heart of interacting with people. Some of us, some of web developers, which basically they work on a dark web. They work hard to disapprove what we as a clear developers we do. They'll work hard to hack what we are doing. So by doing that, we have measures on how we can cut these attacks.
Also up for consideration should be pricing and quality of website design, especially for business websites, to ensure easy access to products and services. Cheaper websites often come with common appearances and less components compared to premium websites, and are often harder to navigate, making for a poor user experience that can often dissuade customers